with the help of all that information, I'm going to now share my Bitcoin prophecy. I think we're going to be $21 million in 21 years. It's a very special time in the network, maybe the one time in the history of the network where you look out 21 years and you see 21 million. Specifically, I expect 21 million coins at a $21 million price in 21 years, and people ask, how's the network going to grow? It's going to be growing at 21% in 21 years. The volatility is going to be 21. This is all, the only number you need to remember is the number 21.
Michael Saylor's belief that a single Bitcoin is eventually going to be worth $21 million. I know it's a number that sounds like pure science fiction, but Saylor has this entire framework he claims will make it a reality. So let's break down his case. Yeah, just take a second and let that number sink in. $21 million for one Bitcoin. It's an absolutely astronomical figure. So the big question we're asking in this explainer is there actually some kind of coherent logic behind this number, or is it just pure wishful thinking?
And here it is, the prediction, straight from the man himself. You got to admit, the symmetry is pretty catchy, right? 21 million coins, $21 million in 21 years. But according to him, this isn't just some memorable line. He believes it's the inevitable destination.
So how in the world does he justify a claim that big? Well, Saylor's argument really rests on a few key pillars. The first one is something he calls the Great Adoption Wave. Basically, a series of recent events that he believes have completely and permanently changed the game for Bitcoin. Okay, so his first piece of evidence, it starts with Wall Street. From Saylor's point of view, the launch of Bitcoin ETFs just opened the floodgates. He points to about $150 billion in new capital as proof that Bitcoin has finally shed its fringe asset label and has truly arrived as a legit player in high finance. Next up, he points to the political scene. Saylor claims there's been this massive shift in Washington. He argues that the whole vibe has moved from hostile to, well, actually supportive, with some leaders now openly saying they want America to be a Bitcoin superpower. Then he points to what he sees as a really surprising turn, the regulators. He argues that agencies that were once seen as these huge obstacles, like the SEC and the Fed, are now actually creating the very rules needed for banks to get involved, which is crucial for mainstream adoption. And look, according to Saylor, this isn't just a U.S. story. He sees this global coalition forming where international governments and even the crypto industry itself are all starting to rally around Bitcoin as the foundational asset for the entire ecosystem. Okay, so you've got this huge wave of adoption as the backdrop. That brings us to the second pillar of his argument, the economic engine. This is where Saylor really makes his case based on raw performance, putting Bitcoin head-to-head with every other major asset out there. And he brings the numbers to back it up. According to his data, Bitcoin's average annual return over the last 5 years has been a whopping 56%. Now, you compare that to roughly 25% for the S&P 500 and only about 10% for gold. For Saylor, this dramatic outperformance, that's the heart of the whole economic argument. Now check out how he applies this to the corporate world. He argues that for a typical public company, it costs them about 13% to raise money. So if that same company can invest that capital into an asset that's returning 56%, like Bitcoin, he claims it's not just a good idea, it's one of the only ways to create serious value for shareholders. It becomes a super powerful treasury asset. And yet, here's the kicker. Despite that insane performance, Saylor's claim is that 99.8% of the world's capital hasn't even touched Bitcoin yet. And from his point of view, that's not a weakness at all. It represents this massive, untapped potential just waiting to flow in. So, okay, let's say you accept his premise, that adoption is happening and the economic case is solid. The next logical question is, what do you do with that information? Well, this next section breaks down the specific strategies Saylor proposes, from the super simple to the pretty sophisticated. And his model projects some pretty staggering outcomes depending on the strategy you use. Now, these are his projections, of course, but look at this. He believes a simple investing plan could turn $2 million into $40 million. But using what he calls intelligent leverage, that number could jump from just 1 million all the way to 190 million. The potential scale is a key part of his whole thesis. Of course, wait a second. The word leverage probably sets off alarm bells for any sane investor, right? I mean, getting wiped out is a very, very real risk. Saylor actually addresses this head-on, arguing that not all debt is created equal. He offers a specific framework for what he calls tradecraft. For Saylor, the rule is actually pretty simple. He draws this hard line in the sand. Short-term debt at high interest rates is a recipe for disaster. He calls it being a loan shark victim. But long-term debt, we're talking over 10 years at a low interest rate, that's a financial genius move because it lets you acquire a high-performing asset with cheap capital. This brings us to the final and maybe the most important pillar of his entire argument, your mindset. Because according to Saylor, the path to $21 million is not going to be some calm, steady climb. Nope, it's going to be volatile, and navigating that requires a completely different perspective. He basically reframes volatility completely. You know how most of us think volatility is bad? Saylor says we've got it all wrong. He argues that if Bitcoin wasn't volatile, it would already be priced perfectly, and the big institutions would have already bought it all up. The volatility, the chaos, that's the gift that keeps the door of opportunity open for everyone else. He uses this old quote from the American West to frame the journey. In his analogy, never starting means you never invest in Bitcoin at all. And the weak? Well, those are the folks who use bad leverage or panic sell during the downturns. The journey, he insists, takes both courage and a really strong stomach. So how does he tell people to handle all that turbulence? His metaphor is perfect. When you're on a stormy sea, looking down at the chaotic waves right in front of you just makes you sick. The only way to stay steady is to fix your eyes on the distant, stable horizon. And for him, that is the horizon. It's his prophecy. The 21-year time frame and the $21 million price target. He truly believes that by keeping this long-term goal in focus, all the short-term noise, the daily price swings, the media panic, it all just becomes an irrelevant distraction. Ultimately, Saylor's entire four-part argument really boils down to this one confident call to action. His assertion is that the trend is clear, the economic case is made, and the hand has been dealt. The question he leaves for everyone is this. If you truly believed you were holding a winning hand, how would you play it?
And the question is, how are you going to do it? What is your Bitcoin strategy? You need a 21-year plan, right? If you have the vision, but you don't have a plan, you're just dreaming, right? You're not going to get there by talking about it. You need clarity. You need to know what's going to happen. You need courage. You need to be willing to take a risk. You need to put your own economic interest at risk. You're going to need to take a courageous step. And then you need to take action. Clarity, courage, action. People that understand Bitcoin buy Bitcoin. People that don't understand Bitcoin talk about Bitcoin. So what are you going to do? You're going to build a long-term plan based on disciplined work, responsible finance, sound engineering, and Bitcoin.